About Lucent. Lucent Technologies is calling rumors of an impending bankruptcy absolutely false. Shares of the company hit an all-time low this morning as rumors of a Chapter 11 filing swirled around the street. I had heard that this morning when I was on the floor of the New York Stock Exchange, but I did not report it. I thought that would be irresponsible to say something that was just a rumor. But before the Lucent officially responded, the stock actually reached a low of $5.50, only to rebound as the day progressed. Here's why the stock came back a bit. The company's chief financial officer issued a statement saying the following: rumors that Lucent is filing for bankruptcy are baseless and irresponsible. Take a look at the entire history of Lucent trading. The company was spun off from AT&T exactly 5 years ago on April 4th, 1996. Now, it was spun out at a split-adjusted price of $6.75, and so this morning the stock was trading at an all-time low. The all-time high for Lucent, you see that chart right there, $84 a share. In December of 1999. That is where we see that all-time high of 84. Joining us now is Tom Lauria. He covers Lucent for ING Barings. Tom, good to have you with us.
Thanks, Maria.
Your opinion of the rumors going around today on Lucent?
Yeah, I think for the most part the company was very clear that there is not an immediate filing pending in terms of Chapter 11 bankruptcy. For the most part, the company does have a fair amount of cash and assets, and I think it will continue to pare down some of those assets, sell them, and to generate cash, and including the fiber optic cable business.
That cash that you mentioned includes the $6.5 billion package, a financing package that Lucent was able to get back in February. That was supposed to ease a potential cash crunch.
That's right. I think for the most part the company has secured quite a large credit line which it can draw down on. There were some reports that the company has begun to draw down on that credit facility. That did raise some concerns that perhaps the company, the credit situation might be not as strong, and that it could be reduced in terms of the rating, credit rating-wise, toward a junk bond status from the investment grade that it has right now. I think for the most part that it should be able to maintain its rating, its credit rating at this point, unless the business deteriorates further. And of course, we'll get a better look at that later this month when the company reports April earnings, March earnings rather.
Now, you know, it's interesting because I don't know how these rumors get started. I mean, as I mentioned, I had heard that when I was on the floor of the stock exchange this morning. I saw a big crowd accumulating around the post, but I did not report that because I just thought that was irresponsible to say such a thing that may not have been known to some people. How do you think that got started?
I had heard some of these rumors late last week. The company, there was a lot of investor questions about the company's liquidity, whether or not it would be able to make its payment obligations. And if you look at the balance sheet, it really does have quite a number of assets. I believe at the end of December it had $50 billion worth of total assets, several billion in cash and cash equivalents, and quite a number of other assets that could be sold if the company really did need to make cash and obligations. And I think what's really interesting is that the company just essentially secured the credit facility, and I think that obligation would not have been granted if there was an immediate bankruptcy filing.
All right. So give some advice to the viewers who actually bought Lucent in the 80s, and the 70s, and the 60s. What do you think they should be doing at this point? I know you have a hold rating on the stock.
I do. I think for the most part, at this type of valuation, we're looking at a valuation of about 1 times forward-looking 2001 revenues. It's discounted about 30% from where Nortel Networks is trading, a very similar company. And I think for the most part, you'd probably be better off holding the stock at this point and not selling it. I think in the long term, hopefully we'll see some appreciation from this level. The downside risk clearly is limited to about $5 or $6, and that's at the very, very worst case. And the upside, if the market comes back for telecom equipment, could certainly have a decent return from this level.
Now, one of your points on the graphic that we have up right now is likely changes to existing structure. What do you mean by that?
I think for the most part, the telecom equipment market has become so competitive, and it's really driven by the increased competition that the service providers, essentially the customers of equipment companies like Lucent and Nortel, that they're looking for best-in-class products, and more so now today than they were. And I think that's why we've seen the rise of companies like Juniper Networks take away market share from companies like Cisco, because the carriers really want the best product that they can get, and it's not as much about a bundled offer, a bundled solution as it was. So I personally think that over time, I think the company would need to consider alternate structures, potentially additional spin-offs, or even a breakup similar to what we've seen with AT&T. And I think long-term, that could very well be a possibility for Nortel as well.
So what do you need to see in order to start nibbling on Lucent stock? What would make you upgrade?
I'd like to see a top-line growth improvement. For the most part, we've got to see a revenue driver in terms of good strength in the core business, optical networking, wireless, carrier data networking. If we see good strength in those types of fundamentals, then I think the company would not need an additional headcount reduction. But barring those types of improvements, I think the cost structure remains out of alignment with the revenue opportunity at this point, and we'd need to see an additional headcount reduction really to improve the profitability. And it's not something that I'd like to see, but I think it's something that is absolutely necessary if the fundamentals of the business don't improve. And given this market, the severe conditions that are in the telecom carrier markets, then I think it's more likely than not that we'll see some type of fundamental change to the company's existing structure.
All right, Tom, good to have you with us. Thank
Thanks.
you so much.